So this week we will revisit the indexing that we were been talking, and I understand from you you felt it's a bit complex, so I try to we try to do it different this time to see if you understands.
Didn't you say this time to understand more, we're gonna do it like put fake money?
Yeah, I already did it, so I can also explain how one can do
Okay.
it. Yeah. So it's 10. Let's start. Okay. So yeah, let's look at this portfolio which we talked about. So I created a sheet here. I guess you all have the link of this sheet we were been using. I don't know if you remember. This is the same sheet where we talked about the number of shares and Shiv and Beam, how they invested and how they grown their money. So within the same sheet, I created another sheet called portfolio. Um, so this is where we would be tracking some investments. If you remember last week, I said we will take 100,000 as our money, which we would invest together and see how it works during our weekly session. So from now onwards, every week, first 5-10 minutes, we would review how our portfolio is been doing for a given week. Okay, so that's the idea. So you get a feel of how this investing works. So here, what I have done is I had an option. So we have 100,000. I can invest it in one go, or I could split into multiple months. So the reason I am splitting, can anybody guess why I want to split it into multiple months rather than investing it in one go? When I am investing in index funds, as you know, we decided to invest it in two index funds, right? So I picked up two index funds here. One from HDFC index fund. It's tracking Nifty 50. So that's a top 50 companies of India. So I'm betting basically on top 50 companies of India when I'm investing in this index fund. Second index fund that I picked up is Vanguard Stock Total Stock Market Index Fund. It's all the US companies. And my question now is, I had an option. So investing is every day is taking decisions, right? So here I had an option of investing 100,000 in one go, but I decided to split it into 5 months and invest it 20,000 every month. Can anybody think of why I'm doing this?
So we can understand how it works.
Yeah, that's one way. The second way is that basically, as you know, markets are fluctuating. It goes up and down every week, every month. So I don't want to I don't want to invest when it is up, when it is on the top cycle or down cycle. I don't know when it is top and down. So what I want to do by splitting into 5 months is I want to get average of best months and worst month. So as an investor, I think you have been attending these sessions now for some time. So as an investor, uh, if you have to invest some money, so now we have to invest 100,000 Danish krone, which would be the best time, when the market's going up or when the markets are going down?
when the market is going down.
Exactly. So we need to pray. When you have money, you want to invest, you should always pray and you should feel happy when the markets are going down. The reason being is it's simple, right? When you are investing, you are buying businesses, small share of a business, you get it for cheaper price. So you should always pray that market should go down because uh, if I'm at your age, I would always pray that market should go down because the advantage is you can invest as much money as you can because you are not going to withdraw your money sometime in near future. You would be investing for a long time, so you should always pray for markets to go down so you can invest more money. Okay. So the logic here is I don't want to park it in one month all the amount. I want to split it into 5 months. I could have split it into multiple more months, but I just decided, okay, let me just split into 5 months because the sessions we would be doing, we want to see the progress. And the second thing is, I don't want to deploy all the money at one go because you never know if market goes down, I may buy in the future, right? With a better prices. Mm, Somebody has a question. Arish, you have a question? Yeah.
No, I don't.
Okay. So this 100,000, so Google Sheet, Google also have something called Google Finance. So this is Google Finance is the service that Google provides where you can track all the finance markets across the world. So so what I did here is that so I used some Google Finance function. As you can see, I used Google Finance and I am getting the price of this index fund. As you see, B11 is the index fund ticker. So the tickers is something you need to understand. These are the short names of the companies. So every company have a ticker name. It's called market ticker. So for example, if you search for Apple, Apple ticker is AAPL. Can you see here AAPL Nasdaq US? So that's a ticker. Okay. So if I go to my sheet, so if I want to get a Apple price, I would Apple Inc. This is the company name and the ticker name. What was the ticker name? AAPL. So I just need to put AAPL here. And if I want to get the current price, what I should do is I can just use Google Finance. That's a function. And then I want to get a current price of Apple. So I selected B13, comma, and then I need a price. So I would, so basically, so it got me the price of Apple. So this is the beauty of Google Sheet. You could call a function and track your portfolio. So similarly, I did for two index funds. So basically, I am getting the price of the HDFC index fund as well as VTSAX. These are the ticker names, short names of the companies, and that's the current price. So current price is the price as on Friday. So right? Market works from Monday to Friday. They don't work in the weekends. They are not open in the weekends. So this price is from the Friday. So 134 Indian rupees, and for VTSAX it's 104 US dollars. This is the buy price. This is the price we bought last week. So we bought it on last session. We had it on 8th, right? So I bought this on 8th. So 135 rupees, 106. And we are investing 20,000 Danish krone. What I
I
did,
think it was on the 9th.
yeah, yeah, it takes from the 9th, or it takes from the Fridays, because I did it on Sunday, so it probably took it from Friday's price, 7th. So then what I did here is I split this 20,000 Danish krone, 10,000 for each fund. So one fund gets 10,000 Danish krone, another fund gets the 10,000 Danish krone. So I converted the 10,000 Danish krone to INR, Indian rupees. That's 120,000. And each share costed me 135 rupees. So we got 884 shares of HDFC index fund. Okay. Similarly, I did for Vanguard Total Stock Market Index Fund. So 10,000 Danish krone, I convert that into USD. These are the exchange rates. So I gave this table here. So this is DKK, 1 DKK equal to 0.16 USD. USD is US dollar. And 1 DKK, I took INR 12 rupees. So that's the exchange rate I used for this calculations. So when I converted 10,000 to USD, I got it because it's 0.16. I got $1,600. So I took the $1,600 and bought the shares of VTSAX, and I got 15 shares. And the price I paid was $106. So the total amount that we invested is 20,000 DKK. It's showing in different currencies. This is in Indian rupees. This is US dollars. Because the fund we invested, one is in India, one is in US. So I'm taking Danish krone currency, investing in India with Indian rupees currency, investing in US with US dollar. So every time when I move money from Denmark to India or in US, I have to convert them into the respective country currency. That's the only way I can invest in those countries. So, so, that's the amount. And as you can see, during last week, we actually lost money. So if you see, HDFC index fund lost by minus 0.99%. You can see it here, right? So let me zoom out. So if you see here, our buy price was 135 rupees, 35 rupees 85 paisa, and the current price is 134. So the difference between what we paid and what is it selling today is negative 0.99%. Similarly, with the Vanguard Total Stock Market Index, we paid $106.46, whereas the current price as on Friday was $104.89. So basically, the value of this investment, $1,600 became $1,576, and the 120,000 rupees that we invested become 118,000. So basically, during this week 19. So that's what I would also present in the slide every week. So during this is week 19. So during this week, the market went down. So our index fund also went down. So that's that's the that's that's how our investments are doing for this week. Any questions so far? Are you scared? Are you worried? Hey, within 1 week after we invested, we lost money. So we lost around $250. Sorry, not $250, 250 krone. So our investment was 20,000 Danish krone, and the current value of our investment, the sum of these two is 19,758. So we lost around 147.50. Sorry, 247. So we lost around 250 krone during this week. So this is how markets behaves in short term. They go up and down, but one should not be worried about going up and down in short term. You need to look at a long term view. 1 year, 3 years, especially kids like you with you have a long time horizon, so you should not be worried about weekly fluctuations. But this is just to showcase how markets behaves on weekly basis, so you understand, you get the feel of how the investments goes and up and down on weekly basis. Does this make sense, or any questions?
It makes sense, but can we see the graph?
Um, Actually, I have a question. Um, so, so if one company goes down, does it mean all the companies in Vanguard Total Stock Market, um, will all of them go down?
No.
No,
So
it's
if
like
you're, yeah,
40% goes up and then 60% goes down. Then, some of them, then the percentage is more companies are going down than up. So then that's why the total stock of market goes down a bit.
Okay.
that's
Thanks.
correct. If you remember, index fund is nothing but it's like of khichdi, right? I guess you all know this dish khichdi. They add all the vegetables into rice and then they call it khichdi.
Yeah.
So it's the kind of khichdi. Index fund is like of khichdi dish, or you could imagine like a buffet. Are you guys been to any buffet where you go and eat anything you want and you pay fixed fee? It's called buffet.
Yep. Yeah. I.
Yeah.
So this index fund is like you are going to buffet and eating whatever you like. When you go to buffet, some desserts, some dishes are really tasty, some are not as good as you expected. But what you do is you compensate whatever tasty you eat more, and whatever you feel is not tasty, you don't eat much. So index fund does the same way. So some companies do well in a given week or given month or given year. Some dishes are really taste well, right? So similarly, index fund is nothing but like a buffet of companies. So if you see the companies here, so these are all the different companies that this Vanguard Total Stock Market Index Fund has invested, and these are top 10 companies. So the behavior of top 10 companies drives the performance because these are the major percentage of the index. So if you remember, this index consists of 3,781 shares, um, but top 10 has almost, I think, yeah, as you see here, 10 largest holdings is 22%, 22.90%. So these are the top 10 holdings. So for example, if this top 10 holdings goes by 2% down, it would definitely impact, right? Because these are the major companies are that are in index. So that's how index fund moves. It provides the it goes in the direction of the top 10 20 companies, how they are performing. If they are performing really well, again, this is not the performance of the companies, it's the behavior of the people. Last week people got scared, because of that people want to pay less prices for these companies, uh, because people wants to pay less prices for these companies, the share value of those companies went down because we are owning the index fund which holds all these companies tiny bit. Hence, our index fund also went down. Do you see the connections? Market is nothing but a bunch of people. They are in happy mood or sad mood or they are in scary mood. So they have emotions like we have, and based on those emotions, they can drive the market behavior. That's one angle of looking at it. Another angle is it's also the performance of the companies. Last 2 3 weeks, companies are been providing quarterly results. So if the company, you remember, we discussed every company releases the quarterly results. Like in your school, you have every 6 months you have some results presented by your teachers, right? Similarly, companies have every quarter. Quarter means every 3 months. So in a year, they present the results 4 times every 3 months. So, for example, in this quarter, when they presented the result, if the quarter results were not as good as expected, what does the market do? They penalize the companies. That means market does not want to pay high prices because the performance of the company was not as good as they were expecting. So that's the general behavior of market. But if you are a long term investor, should you worry about quarterly results?
No.
No, exactly. If you are investing for 5 years, how many quarters are there in 5 years? 5 times 4 is
20. 20.
exactly. If you are, let's say, investing for 5 years, longer horizon, time horizon. If it is 5 years, I have 20 quarters. In my 20 quarters of a company, if 5 6 quarters does not perform well, 15 quarters performs average, sorry, some quarters it performs average, some quarters it performs really good. Would I worry about one quarter in my 20 quarters that I'm investing it for? So that is the logical thinking you have to think through when you are investing for a longer term. If I'm investing for short term, if I'm a guy wants to make profit in one quarter or 1 month, I'm worried about this quarter results. If my time horizon is only 1 month to 3 months, but if your time horizon is 3 to 5 years, you should not be worried about one quarter results because you have so many quarters that would come in the future. Uh, and this quarter results also been impacted due to company performance as well as the economy. If you remember, um, companies are part of economy, and if economy does well, companies do well. If economy does not do well, companies won't do well, right? So that's also something we need to think through when we think about why stock market went down, why we stock market went up, should I need to worry? So all this thinking you have to do before you you know uh, decide what is that you're worried about. Does this make sense or anything? I think you are asking about the graph, right? So I could go to
Yeah.
uh, I think it was showing me graph here. If you do go to Google and search with Vanguard Total Stock Market Index, you see they have 5 days, 1 month, 6 months, 1 year to date. Year to date is from 1st of January till the date when you are checking. So that's a year to
No, but
date.
you're doing it with like, it's kind of like a game, right? It's not with complete real money. It's like,
Yeah,
You
it's
don't
a,
actually buy shares. It's just like just to see how the stock market goes. So
exactly,
so is the
exactly.
graph like is the graph the real one, or is it like is there a graph for also fake money?
This is a graph of a real index fund, how it has performed. And when it comes to, I haven't plotted any graph for our investment, but if we plot a graph for our investment with a 1 week horizon, 1 week timeline, you would see it went down, because as you see, it went down by, you know,
Yeah, yeah. Okay.
so that's and right now it's a fake money, but in some months, once you feel comfortable, we could also invest real money. I can invest some money on behalf of you. I have no issues. But before we invest, we all need to understand what we are investing in. Until then, we would not invest. That's the idea. Any investments you do in life, you would not do just because your friend told you, or just because your father told you, or it's just because Hari uncle told you. You should have your own thinking, and you should have at least some understanding of why you are investing in that, whatever you are investing. It could be one Danish krone, 100 Danish krone, or 100,000 Danish krone. You should treat all the money equal. It does not make any. You should do the same homework, whether you are doing it for 10 Danish krone, 100 Danish krone, or 100,000. When you grow up, when you become 40, 30, 35, you might be doing the same for 100 1 million Danish krone. You should do the same thinking. What is that I am investing in? Do I understand what is I'm investing in? Do I understand the risk profile of the investment I am doing? So that's the same thought process we would learn through this exercises we would do. Do I understand what I am investing in? Do I know the risk profile of what I am investing in? What is the worst case scenario for this investment which I'm making? Do I lose money? So that's very important. We should never lose the money. That's the game. I think you all play the game, right? This computer games. In computer games, if you lose I don't play much games, but if you lose the power, or you don't have a power to continue the game, what would happen? Game is over. That's a message you get, and then you have to go and start the game again, right? In investing world, the first rule you need to remember is don't lose the principal. When I say principal, the amount you are investing in this case, our principal is 100,000 Danish krone. First rule in the game is don't lose the 100,000. Okay. Second rule is don't forget the rule number one. So that's as simple as this. So we should never lose our principle. That's how we should play this game of investing. But anyway, so this is how we would be tracking, and we would see how this index funds performs over the next couple of weeks. And let's look at different other index funds which we were talking. Should I do some more whiteboard explanation of index funds, or is it I think we can see one video maybe that gives you. I think we haven't seen this video. Should we just watch this video? Probably that also gives you some explanation.
Yeah.
How do, is that video in Netflix? So like, are
Yeah,
those
it's
series?
yeah, it's in Netflix. It's called Explained.
I've
There is a
already seen.
yeah. So they explain different topics.
Oh,
It's a series in Netflix.
oh, so it's not. Thanks.
That any the companies sell when they are going for IPO. So in her case, she has a lemonade business. I think we talked about this in one of the sessions. So lemonade business is she wants to expand the business. She went to the rich people, if they can invest in her business, they were not interested. She also went to the bank. Banks were not interested to lend money because the banks thought it's very risky. So then she went to public and she issued a initial public offering. So any company can go to stock exchanges. In New York, you have New York Stock Exchange. In Copenhagen, you have Copenhagen Stock Exchange. In India, you have NSE, BSE, and then they can raise money from public like you, me, and everybody else. So she went to IPO, initial public offering, and she raised money. And in the process, she is issuing the shares. And by the way, this is how it used to be before internet. People used to get a physical share like this paper, what you see in the video. But now after internet, it's a virtual document. It's a PDF document. Uh, so then she explains all the different things that happen in the market. But overall, the idea of raising money from
Why
the
did it
pub.
come back?
Sorry.
Sorry.
So the idea is, companies raise money, and then uh, in order for tracking how the companies are performing, as you saw, every country has their own index funds. Here, literally across the world, all the countries have a index. Basically, indexing is tracking how a given country doing from stock market point of view. So in Germany, they have their own index through which they track how German stock market is doing. Similarly, in Copenhagen, we have our own index. I think it's called MCX something. And in US, they have S&P 500 and Dow Jones. That's the indexes. In India, we have Nifty 50, and we also have other indexes. So every country has indexes through which they track how the markets are doing. Um, and investing is basically we are investing on those indexes. So I just want to show you an example of Indian uh, market. So this is indices in India. If you see, this is the Nifty 50. That's the top 50 companies of Indian um, economy. And then Nifty next 50, after 50, 51 to 100. That's this next 50. So these are the top indices, top two indices. Then they have mid cap. Mid cap is medium size companies. Small cap is small size companies. Okay. So then this indices is consist of all these different sectors. You see, this is agriculture sector. So if you expand the agriculture sector, you have fertilizers that are used for agriculture, meat, paper and board, and sugar. These are all the different companies within fertilizer. If you see under agri, we have fertilizer. These are all the different companies, Coromandel, all these different companies which are part of the fertilizer business of agriculture. And this is different meat companies, Avanti Feeds, they export the shrimps across the world. Similarly, we have Venky's India, they do chicken production, chicken meat production in India. So these are the meat, packaged meat. So this, if you see this Indian in companies, they are part of all these different sectors. I think to know you are asking logistics some weeks ago. So within logistics, this you have aviation logistics. Aviation logistics basically moves people from one place to another place. And then you have real logistics who moves the goods from one place to another place. So within logistics, these are all the different companies you have in India. So that's a logistics. So similarly, you can see, yeah, banking, finance, and services and insurance. These are all the banks and insurance companies in India. So if you look at the banks, these are all different banks we have. So let's just short period of time, let's look at the banks, okay, so that you get the feel. So within banks, if you see which one has the highest percentage, SBI is 12.55%. So that's the top bank. Where is the other bank? HDFC is 31%. So that's based on the market cap. So these are all based, this index is done based on the market cap. So if you remember, market cap is nothing but the price multiplied by the number of shares outstanding. So as on today, within India banks, HDFC Bank have 31% market share of the total Indian banking market share. Does this make sense, or is it? So, for example, after HDFC, the next biggest bank which has the majority market share is, I think, ICICI Bank, 15.16. Then after ICICI Bank, you have Axis Bank, that's 8.3 percentage. So we have Kotak Mahindra Banks. I think that's the third after. So this is based on the market cap. All these indices is based on the market cap. It's not based on the market share. That's the difference. So maybe I can show you. Market cap is different from the market share. So let me show you the same. So I'm showing you the market share of the banks. So if you say the market share, let's say we have 100 people in India, how many of them are using these big banks? So let's look at it. If you see, out of 100 people, 22.94 people or 23%, 23 people are using SBI as a bank. So this is the market share. So this is how many people the bank is serving. You know, how many people, for example, same like cars, right? How many people are buying Tesla versus how many people are buying Maruti Suzuki? So the volume is too high for Maruti Suzuki. So market share is different from market cap. Market cap is, you know, the people. So here if you see, HDFC market cap is 31%, but the share that market it's serving, HDFC is serving only 10.26% share of the Indian population. So if you have 100 people in India, it's serving 10 people, but it's have a maximum market share, 30% market share. Sorry, it has a maximum market cap, 30% market cap. The reason being is many people wants to bank HDFC comparing to SBI. Look at SBI. SBI is serving 22 people, 23 people. But if you look at the market share of the SBI, where was the SBI? SBI, it's only 12.5%. The reason why SBI market cap is only 12.5, even though they are serving 23% of Indian population, or 23, 22, 23 customers of 100 people. The reason being is, in a market, they want to pay HDFC higher price comparing to SBI, because SBI is owned by government and it's not managed it well. That's the reason market does not want to pay high price for SBI, even though they are serving many customers and they have bigger market share. So that's the difference you need to understand between indices percentage versus actual market share that the company is serving. Does this? I think it's a bit complex, but I guess you should try to understand market cap is different from the market share. Market share is the number of people the company is serving, whereas market cap is how enthusiastic the stock market is against that one company. How market wants to pay more money for that. And why do you think many people wants to buy a HDFC Bank comparing to SBI? Why do you think that's the case? In any guess, why do you think people wants to buy HDFC Bank comparing to SBI, even though SBI is having a major market share?
Could you say it again?
Why do people wants to buy HDFC Bank?
Because it has a higher market cap.
No, why would you invest in a company? Because
Uh,
you're expecting more profit from the company, right?
yeah.
So
Uncle, because
Oh, because
HDFC
the
HDFC Bank is a private bank. It's not run by the government.
yeah, exactly. It's not just that reason, it's also the profit. So let me show you. So if you look at HDFC Bank, I opened screen.
it's a profit more in HDFC Bank than the other bank.
Exactly. They are, though they are serving less customers, HDFC is serving less customer, but they have more profit. Though SBI is serving more customers, they have less profit. So let's look at that from financial angle. So I opened both HDFC and SBI. If you look at HDFC, I'm looking at the P&L, profit loss statement. In the profit loss statement, they profit them their profit net profit is 31,833. Okay, and their total revenue, the money they made is 128 100,028 128,552. So they made 31,000, almost how much is it? 23% profit. Comparing to 128, they made 31. Now let's look at SBI. So wow, look at the revenue they made, 275, but look at the profit. So they are not making even 10%. 10% of 275 is 27,000, right? So
Yeah.
they are making 23,000, less than 10%. Comparing to HDFC Bank, uh, they are making 128,000 as a revenue and then 31,000 as a profit. So they are making 23%, around 23%, whereas SBI is making less than 10% profit. So that's the reason market wants to pay high price for HDFC, because it's a high quality company and they're making more profits. That's the reason the market cap of HDFC is higher. It's 764 lakhs 870 crores, whereas SBI market cap is 321,000. So it's almost
Crores.
yeah, exactly double the market cap. But how much customers it's serving? If you look at this another website here, i- it's serving, if SBI is serving 23 customers, HDFC is serving only 10 customers. Even though it's serving only 10 customers, they are making more than 2 times profit of SBI, and the market cap is double than the SBI. So that's the reason why people wants to pay more price for the high quality businesses, because high quality businesses are making high profit margin. So investors assumes if the company makes high profit, they are also going to make high returns. Hence they are making more. They are paying more price for the high quality um, mm, businesses. So if you have been given a choice between HDFC Bank and SBI, would you choose HDFC or SBI?
HDFC.
HDFC.
Yeah, that's the same thinking that is happening in the market, that
HDFC.
everybody wants to buy high quality. So hence, if many people wants to buy high quality, what happens to the share price?
SBI share price goes down.
Goes down.
Yeah, what happens to HDFC?
Its share price will go up.
Yeah, its share price will go up.
Because more
Ex-
people are buying it.
Exactly. If the more people are buying, if the share price goes up, what happens to the market price?
HDFC gets more market prices.
Yeah, it gets more market cap, right? Because if you remember, market cap is consists of two variables. One is the price, second one is the number of shares. If the price goes up, the variable price is going up because many people wants to buy the same company because it's a good quality company. If many people are coming and asking for same company, the price goes up. So market cap is multiplication of two variables, price multiplied by number of shares. When the price goes up, market cap also goes up. That's the reason market cap of HDFC is 7 lakhs 64,870 crores, whereas SBI is 3 lakhs 221,000. So that's almost double the market cap of more than double actually. Does this make sense? So what I did here is I compared the bank index based on the market cap, whereas we saw HDFC has 31% in the bank index of all the different banks in India. So these are all the different banks in India. So they are listed. You can buy any of these banks you want tomorrow. These are all the different banks. But out of all these banks, HDFC got 31% market cap. So in index, they have 31%. So tomorrow, if you go and buy a bank index fund, there is a bank index fund. You can also buy just banks index fund. You are thinking, hey, banks are a good business. I think I make a good money by investing in banks. And tomorrow you decided to invest in bank index in India. If you invest in bank index 100 crore, what they do is they buy 31 crore worth of HDFC, because 31% of HDFC is in this index fund. So they buy 31% of HDFC. 15 crore goes for ICICI Bank. Likewise, based on these percentages that you see here, based on that percentages, they buy the equal percentage share of those banks in order to match the index. But when you look at the market share which they are serving, SBI is serving bigger market share, but the profits of that SBI serving is very low. So there is a difference between market cap and market share. Some companies, though they are serving very less customers, they have better profits. Some companies, though they are serving um, I think you can take an example of Maruti Suzuki. Maruti Suzuki serving many customers, they sell many cars comparing to Tesla. Or no, I don't want to compare with Tesla. Maybe BMW or Mercedes Benz. But Mercedes Benz and BMW makes more profit because they have better profit margins. So I know this is going in all directions, but this is just to get you an idea of how indices are built. So if you take Indian, these are all the different companies, and they are being categorized into different buckets. But if you buy top 50 companies, you get the top 50 market cap companies. Okay, if I go back to the slide, I showed you all the different options. I want to show you one another option. If you want to buy index fund, you could also buy this company called Berkshire Hathaway. It's also same like index fund. So this, I guess you probably heard this guy Warren Buffett. He's one of the richest man in the world,
Yeah.
and this guy is running this company called Berkshire Hathaway. So Berkshire Hathaway is almost like index fund. So if you see, I given the links here. So Berkshire Hathaway owns all this 80 plus companies. So they are 100% owners of this 80 plus companies. On top of these companies, they also invest in stocks. So if you see here, I also give you the link. So these are the different stocks the Berkshire Hathaway have in their portfolio. For example, they have Apple, that's 43%, Bank of America, 11% of their portfolio. So basically, the way you need to visualize Berkshire Hathaway is Berkshire Hathaway is combination of owned companies plus they also invest in public listed companies. So if you buy Berkshire Hathaway shares, you are basically getting the ownership in all the shares they own plus all the companies they own. So it's similar like index fund. So basically, when you buy Berkshire Hathaway, you are buying tiny percent ownership of all these companies, 80 plus companies. They are 100% owners. Plus, they are also have a portfolio. So if you see, yeah, it's how many billions is this? So this is million. So it's around 269 billion, right? Yeah, 269
It
billion.
says for Apple, it's almost 1 billion shares.
Yeah, that's correct. And they have a value of 117 billion dollars. So they invested in Apple 117 billion. Actually, they invested 30 billion, but it increased by 3 times since 2016. But my point is, if you buy Berkshire Hathaway, you are getting 269 billion dollars of shares they are owning plus the companies they are owning. So let's look at Berkshire Hathaway. How much? What is the market cap of Berkshire Hathaway? So it also like an index fund. So basically, if you invest in Berkshire Hathaway, you are getting all the investments they did it in public companies plus all the so this is so it's $664 billion. That's the market cap of the company. So when you buy mm, yeah, they have yeah, when you buy this company, basically for $664 billion, you are getting $269 billion as their portfolio. So they invested in many companies over many long years. As
Uncle,
you, yeah,
so which is giving more returns? Is Berkshire Hathaway giving more returns, or is it index funds?
I think they are almost equal.
I think it's Berkshire Hathaway
Yeah, it
because
depends on
index
which
funds you
period.
get for index funds you get big changes over many years. But Berkshire Hathaway it's it's a very big company. It's one of the most successful companies in the world, in the whole world. So,
Okay.
and the share prices are also very high.
Yeah,
The shares.
yeah. They have two kinds of shares. You have to buy Berkshire B. Berkshire A is too expensive, but one can buy Berkshire B. So that's but my point is the question was right. So when if you look at the index fund, they are based on the market cap. So what Vanguard or any index fund is doing is they are investing based on the market cap. I'll tell you a funny story. It's not funny, it's a real story. Uh, you know Tesla, right? Tesla company. Tesla during March 2020 was a $30 billion company, 30 or $60 billion company. In last 1 year, Tesla price went up by 10 times. So it becomes 600, $700 billion company. So when the market cap of the company goes up above certain value, what happens is index funds are forced to buy those companies. So all of a sudden, if you buy index fund of Vanguard today, you also get Tesla because the market cap of the Tesla went up. So high index funds has this flaw or is this a disadvantage that they are being forced to buy the companies based on the market cap. Whereas Berkshire Hathaway, they don't take care about, they don't worry about the market cap because these guys investing money based on the returns, and they handpick those companies over many years. So Berkshire Hathaway handpicked these companies for last 50 years, these companies, and they don't have any bias towards market cap. They buy only if they really think is this a good company. So that's the one difference between index fund and Berkshire Hathaway. Berkshire Hathaway is handpicked by great investors within the company, whereas index fund is driven by the market cap. So when the market caps, let's say tomorrow, if Tesla falls down by 10 times, it comes back to $60 billion as it was trading 1 year ago. It would be taken out from the index fund automatically because index funds are driven based on the market cap. So whereas Berkshire Hathaway, they don't have that bias. They don't work that way. They work from purely great companies. They think they would do well in the long term. So that's also one another choice you one have comparing to index funds. One can also invest in such a Berkshire Hathaway. We have similar companies in Europe. I can try to list them. There are similar. It's called uh, investing groups. These guys basically invest in multiple companies, private owned companies as well as public listed companies, and they are listed in share market. So you could go and buy those. So basically, when you buy them, you are getting both, you know, benefit of expertise of these companies who are been investing. So we have such options in Sweden. We have such options. I don't think we have it in Denmark, but we have similar Berkshire Hathaway kind of companies in Sweden, in Germany, in UK, as well as in US. So that's also one another option you could choose if you want to invest for long term. You could invest in these companies where they invest on behalf of you. So they are basically taking your money, investing in public listed companies, or they are acquiring private owned companies like these companies they acquired over 50 years.
Uncle?
Yep.
But then does NASA and like SpaceX, do they also compete in stock markets?
No, they are not listed in stock market. I think SpaceX, Elon Musk is planning to list it. I don't think it's been listed yet. No.
Okay. Okay.
Amazon has similar company, Blue Horizon. That's like a SpaceX company. What Elon Musk has built. Jeff Bezos also
Yeah.
built a
Blue Origin.
Blue Origin, but it's not listed yet. I don't think they are planning to list now. Yeah.
Okay.
Is this making sense, or is it getting bored, or is it too complex for you?
Actually, it's
Some of it is
it makes sense.
most of it is some of it is a bit boring.
Okay.
A little bit is like a little confusing, but most of it makes sense.
Most of it
Okay.
makes sense and a little bit confusing too.
Yeah. It's a good confusion is good. That means we are thinking, right? So yeah, we will try to yeah, these are the things you won't you need to use this a bit more on daily basis, then only you get a understanding of it. So what I'll do is I would also, if we go back to our portfolio, if you all agree, I also want to invest in Berkshire Hathaway, because I feel Berkshire Hathaway is also kind of index fund. So this week I would put 10,000 in Berkshire Hathaway, so we can track 3 companies um, over the weeks. Because Berkshire Hathaway also, it's not a real index fund, but it's acting like an index fund. So okay, so I guess that's giving
Uncle, I
you.
have one
Yeah,
more question.
yeah.
It's just that Elon Musk, when I was reading the news yesterday, Elon Musk said that he would allow cryptocurrency so that you could buy tickets for the future moon missions.
Hmm.
So what is cryptocurrency and why cryptocurrency? Why not other currencies?
Yeah, I think what happened was after financial crisis in 2008, bunch of computer guys, the cryptocurrency is based on the technology called blockchain. So bunch of computer guys, computer science guys got together and came up with this called of, you know, cryptocurrency. That was in 2012, and there were many such cryptocurrencies. They are not authorized by any government, or they are not ruled by any government. So it's a I think we haven't touched the cryptocurrencies yet, but maybe in the future we can touch
Okay.
cryptocurrency. But in general, mm, uh, I don't know. I think Elon Musk himself accepted that he has some issues with his mental health, the behavior he has. He goes in all directions.
Yeah.
So be careful whom you are following. Maybe they are genius in their work, but we have to also see how they are behaving over the time. So I know for many of young generation, I read Elon Musk autobiography myself. It was a fat book. I loved this guy. But the problem is he has this behavior which scares me. So you have to be careful and don't fill your brains with this big followers. You should have independent thinking against these guys, and you should build your own thinking.
Okay. Okay, thanks, Uncle.
Okay, any other questions? I think I would conclude index fund maybe next week, and then we could go to psychology. Maybe we should go and visit the psychology, because I want you to be introduced to human behavior, how you should use the human behavior uh, when you are investing in markets, because it's all comes down to the behavior. It's not intelligence that makes a great returns in investing. It's all human emotions we have to control. So we will start psychology in a week time. I want to touch base the biases we have in our brain, how to tackle them to become a good investor over the time. Okay, with that, let's conclude here, and we'll talk again next week. Thanks for your time.
Bye.
Bye.
Bye.